Get Rich Slow with John Wolf. Hey, I had a question as to how can somebody buy a distressed property, especially buy a property that says cash only or something like that. So first, let me show you what kind of property we're talking about. Again, there's my license information if you want to get a hold of me in Oregon or Washington. And here, I just did a quick Redfin search. I clicked the Fixer Upper button and zoomed out pretty far, and you can see there's a few properties. And this one right here kind of looks the way I'm talking about. So if you notice, you have a home, lot is pretty muddy and unkept, and then if you start looking down the picture, you see all the windows are boarded up, all the garage doors are boarded up. So this is a property that you couldn't do normal conventional financing right out of the gate. So what most people think to start out with is, I'm going to have to go get a hard money lender. I'm going to have to pull up my resources or call my rich uncle and ask for enough money to buy and fix up this house. And sometimes that's the case. Just for example, if this home is being auctioned, then you can't buy a home at auction and then arrange the financing later like a normal transaction. You actually have to have cash up front. So let's just talk about the ways to get that house for those of us who don't have rich relatives to borrow from, or just don't have the assets, in our own bank accounts to, buy a house and fix it up. So the first place people go, and a little bit of that is based on not necessarily the shows, but some of the commercials on like Home and Garden TV, flip this house kind of a deal. They look at hard money lending. And you know what? That can be an excellent solution for exactly the right problem. The big downsides of that are the risk and the cost. So what are you talking about risk? Well, most hard money loans have a definitive payoff period where you have to pay off the whole loan back in 6 months or a year, or you just have to give them the house. The last hard money loan that I saw the terms of was about a year ago. It was a real estate agent friend of mine, just to give you an idea, and she has pretty good credit. The loan was 3 points up front, 12% interest only for 1 year, and then the loan had to be fully paid off. Just to put that in perspective, that means that the lender was expecting to be paid about $115,000 by the end of 1 year for loaning $100,000. And if for some reason the real estate agent got stuck in the transaction or had a problem, then whatever interest the real estate agent had paid and those points up front, so $15,000-ish, the lender gets to keep that money and the house and land. And the agent friend of mine just loses. So let's talk about some more creative options if that's not what you want to do, because while that can be a good option, it's not the cheapest option. So for homes that are especially being sold by a normal real estate agent and where the client is, a normal citizen, not like a bank or something, there's always some room for negotiation, some creativity. So let's just go in the order of most expensive to least expensive options. So one of the most expensive options for dealing with this kind of situation is doing a rehab loan. And people usually think of FHA rehab loans, and there's some good reasons for that. Long story short, you got to put 3.5% down, but you can get a loan for the property and for the improvement that's going to be necessary to make it livable. And the cap of how much that improvement costs is going to be based on what an appraiser who looks at the property thinks it'll be worth after it's been fixed up. Now, there's two reasons that this is expensive. So one, there is a higher interest rate, not crazy higher. Two, there are higher fees to start the loan, also not crazy higher. The real place where this gets really expensive is, long story short, you are required to get a general contractor to go through and bid out the entire thing with contractors. Everything has to be done by professional contractors and has to be signed off as done correctly in the end by the real estate agent and whatever inspectors are necessary for the type of work that's getting done. And any savings most people think that they're going to achieve by buying a distressed property are usually eaten up by just the cost of labor and materials of doing things through a general contractor versus like sweat equity or you being able to go out and make deals for each little piece of work, being your own general contractor, that sort of thing. A better option for many people, especially if their credit is, above, especially well above the 620 score, is you can actually do conventional rehab loans. And it's going to have most of the same pitfalls as an FHA loan, except the total cost of the loan is going to be decently lower and the underwriting standards are going to be decently easier. But otherwise, you still have all that same difficulty with getting bids from general contractors and going forward that way. The next option, you're starting to get into more creative things, and it's what I did to get my house. And there's actually two versions of it. So if you have a home that, like, let's say those pictures that we saw, let's pretend that the only problem with that house was that the windows were busted out and that maybe it has a leaky roof. And everything else is just cosmetic, the electricity, the water, all of those main things, systems in the house work. It's not to be nice, they just work. Floor doesn't have to be clean, it just has to work. So there are two options for going after something like that. One of them is called cash to cure, and the other one is called lender holdback. There's a short-term version of a lender holdback called escrow holdback, but that's only going to work on things that can be fixed very quickly. So maybe like the windows only, but at least in my market, probably not a roof. Anyways, if you have, a handful of discrete issues with the house, so like the plumbing in the kitchen doesn't work is a discrete issue. The kitchen is totally trashed and needs a whole remodel is not a discrete issue, if that makes sense. So let's say like my house that I got, for example, the roof was bad, ceilings were gone in 2 rooms, there were rats, and I think it was dry rot in one area. So those are like, 4 discrete issues. So since I was buying a distressed property, I bought it for less than it appraised for. So I was able to make the sales price higher and get a loan that was bigger. And I had to have everything bidded out just like that. But in this case, everything was bidded out. I got the work done and then the money was distributed. So I was actually able to do some of the work myself. I was able to individually pay specific contractors to do pieces of the work. And that worked out really well. The lender holdback was open for 6 months, which was a little long for the lender's comfort, but that's how long it actually took to put a roof on this thing in the middle of the winter in Portland. Anyways, so you can potentially get the money out of the loan to fix it without it being a rehab loan. And again, your huge savings there are you don't have to have a contractor bid the entire job and have a general have all that complexity. And at the end, all that had to happen is it had to be verified that it was done. So it was really easy. I sent in pictures and invoices. That was it. So the other way people approach this, and honestly, this is the easiest way to do it, is cash to cure. And there are very strict and particular rules once you get into the nitty gritty, but here's the general idea. If you have that same house that you're buying conventional, but you need it needs a roof, it's got rats, there's some broken windows, stuff like that, you can go through and get every single job bid. The lender might require 2 bids for each job, and then they will likely take, and this goes for the lender holdback too, 150% of the dollar amount of the bid, and they'll say like, hey, the job looks like it'll take $10,000 from your bids. So if you can show us that you have $15,000 in your bank account after closing, we're going to go ahead and certify that you're going to get that work done and you're going to use your own cash to do it. That's the basic idea. And if you do that, you can close a loan in a normal, 21 to 30 day conventional closing window. Again, it's kind of a little bit particular what the problems are. It's a little particular about how the appraisal went through, but that is something that you can do reliably. Now, I want to just talk a little bit about buying a distressed property in general. Now, It is a really bad idea to do this if you don't have a decent amount of money backing you up, more than what it takes to do the transaction, the down payment, and the work. So, if you're buying a $300,000 house in Portland and you're planning on doing $100,000 in renovation, if you don't have another $100,000 in the bank, or at least, in a 401k or something you can pull out of to make sure you can get that job finished, you really are setting yourself up for a world of hurt. So this can be a great opportunity, but it can also be a really fantastic financial disaster. So I just want to make sure you have the backup if you're doing that. Also, if you start shopping for these deals, the biggest thing I could tell you up front, and something I've done myself, is you should be willing to put an offer in the house, put down the earnest money, pay for an appraisal, pay for an inspection, and then be totally okay walking away from that deal. In fact, if your financial ability doesn't let you pay for those things and then walk away and just be like, oh man, I wish I wouldn't have lost that $3,000. Oh well, on to the next one. If you can't say that about yourself, you shouldn't be doing this. If you can't say that about yourself, you should only be looking at buying a nice retail property for yourself, which is fine. And honestly, that situation could even happen then. But if you're looking at distressed properties, you need to be comfortable walking away, because walking away is going to be the right answer at least half the time. So you should feel good about it and know you're going to do that up front. Anyways, if you have additional questions, please put them in the comment section. Look forward to talking to you again. Again, I'm a loan officer in Oregon and Washington. So if you want my help, my expertise, please feel free to reach out to me. Have an awesome day.